Picture this. You're holding three portfolios. One has 50,000 HBAR tokens. Another has 10,000 XRP. The third has 25,000 XLM. And right now, each one is worth roughly the same, somewhere between $3,000 and $5,000. But here's the question that keeps you up at night. Which one hits $100,000 first? This isn't just math, it's a detective story. And every suspect has its own strengths, its own catalysts, and its own uncomfortable truths. Let's get into it. But before we dive into the numbers, let's agree on one thing. Most people look at crypto the wrong way. They take the current price, multiply it by however many zeros they want, and call it an investment thesis. That's not analysis, that's wishful thinking. Today we're doing something different. We're looking at each asset through three lenses: technology, institutional capital, and time horizon. Because it's the intersection of those three things that determines who wins this race and when. Starting with the hottest name right now, XRP. 10,000 XRP. At today's price of around $1.15, that's roughly $11,500. To turn that into 100,000, you need XRP trading at $10 per token. That's about an 8.5 times increase from where we are today. Is that realistic? Look at the facts. In 2026, XRP is no longer just Ripple's coin with legal problems. It's an institutional asset. The regulatory war with the SEC is behind us, and the whole industry finally has clarity. A spot XRP ETF is already live on U.S. markets, with JPMorgan projecting between $4 and $8.5 billion in inflows into these products. Citadel already holds exposure through XRP ETF instruments. This isn't retail money. This is serious institutional capital. In April 2026, monthly inflows into XRP ETFs hit $81.59 million, beating forecasts. Total net assets across all XRP ETF products crossed $1.18 billion. The infrastructure is in place and working. Ripple is also pushing RLUSD, their own stablecoin, and expanding payment corridors across Asia and the Middle East. Ripple President Monica Long publicly called 2026 the year of institutional adoption at scale. The numbers back that up. Now, the price targets. Conservative forecasts for end of 2026 put XRP in the $1.60 to $2 range. Moderately bullish models go up to $3.50 to $5. Standard Chartered's base case lands at $2.80. For 2030, Binance sees a potential ceiling near $5. But here's what most people miss. XRP isn't just a speculative asset, it's a working tool for banks and payment systems. RippleNet processes real transactions. MoneyGram, Santander, SBI Holdings, these aren't paper partnerships. These are active clients with real volume. When an asset stops being purely a trading instrument and starts functioning as financial infrastructure, its price floor becomes structurally different. More stable, less dependent on market sentiment. The conclusion on XRP: to turn 10,000 tokens into $100,000, you need a price of $10 per coin, roughly an 8.5 times move from today. Most models put that in the 2028 to 2030 window, assuming a positive macro environment. But XRP has one enormous advantage: liquidity. It's the third largest cryptocurrency by market cap. Institutions can enter at scale without wrecking the price. That matters more than most people realize. Now let's talk about XLM, the quiet competitor. 25,000 stellar lumens. At the current price of around $0.19, that's roughly $4,750. To reach 100,000, you need XLM trading at $4 per token. That's a move of roughly 21 times from today's levels. Ambitious? Yes. But Stellar has a story worth taking seriously. XLM is built for CBDC infrastructure and cross-border payments. Ukraine already selected Stellar as the foundation for its digital hryvnia. The International Monetary Fund studied Stellar's platform as infrastructure for bridging national digital currencies. This isn't hype, it's real-world deployment at the sovereign finance level. The Stellar Development Foundation keeps building. Current development work spans DeFi, real-world asset tokenization, and payment integration. Stellar is confirmed as a partner at the Futurist 2026 conference this July. Price forecasts? The range is wide. Changelly puts the 2026 maximum at around $0.21. FlitPay sees a potential high of $0.98 for the year. Fastbull is more aggressive, up to $1.76. For 2030, projections span a wide range from $1.29 on the low end to $3.78 on the high end. Here's the honest picture. $4 for XLM requires either a massive CBDC wave or one single major announcement at the level of the IMF launches a global payment settlement layer on Stellar. Without that kind of catalyst, $4 looks like a 2030 plus story rather than a near-term move. But here's the nuance. XLM historically makes sharp moves on news. In 2021, one announcement about Ukraine sent the price flying within days. If a major central bank partnership drops tomorrow, those 25,000 tokens reprice fast. This is a lottery ticket with a real shot at the jackpot. And the quantity works in your favor. If XLM ever reaches $4, you're sitting on 100,000. If it reaches $10, that's 250,000. The math scales nicely. One more factor that rarely gets mentioned. Stellar is a nonprofit. The Stellar Development Foundation isn't selling a product for profit, it's building infrastructure. That means their strategic decisions are made with a decade-long horizon, not a quarterly earnings call. For a long-term holder, that's a genuine edge. No corporate scandals, no CEO selling his stake. Just a clean mission. And finally, HBAR. The most controversial one. 50,000 HBAR. At the current price of around $0.079, that's roughly $3,950. To get that portfolio to $100,000, you need $2 per HBAR. That's a move of approximately 25 times from today. $2 for HBAR. A lot of people will say that's fantasy. Let's actually dig in. Hedera isn't just another blockchain. It uses a unique architecture hash graph instead of a traditional chain of blocks. Transaction throughput reaches thousands per second. Finality settles in 3 to 5 seconds. Fees are fractions of a cent. And all of this is governed by a governing council that includes Google, IBM, LG, and other S&P 500 caliber corporations. June 2026 brought serious news. The SEC approved an actively managed ETF from T. Rowe Price that includes HBAR exposure. Copper.co launched institutional custody with staking for HBAR, opening the door for large capital allocators. Active development continues around tokenizing real-world assets on the Hedera platform. These are exactly the catalysts the market had been waiting for. Social momentum is building too. According to Lunar Crush data, the number of creators posting about HBAR jumped from 157 to 334 per hour. That's a signal of accumulating attention, often a precursor to price movement. But there's a challenge that needs to be addressed honestly. HBAR is currently trading 83% below its all-time high of $0.57, which was set back in September 2021. 5 years later, still below the peak by more than 4/5. Total maximum supply is 50 billion tokens. That's an enormous number, and it creates constant selling pressure. Supply inflation is a real drag on price. Current forecasts for 2026. KuCoin puts the average target at $0.18. CoinCub sees a maximum of $0.25. ChainJelly gives a range of $0.08 to $0.09 for June, with some recovery possible through year-end. $2 per token appears in the most optimistic models only for the 2030 to 2031 timeframe. But here's what you have to understand about HBAR. It runs on different logic from everything else here. It doesn't need a retail hype wave. It doesn't need trending on social media. What it needs is for corporations to actually start using the network at scale, and then the demand for HBAR tokens to pay for transactions creates organic upward price pressure from the bottom up. That's slow, but it's structural. It compounds quietly. If Hedera delivers even a fraction of what its governing council composition implies is possible, the numbers get very interesting. Breaking down what each portfolio actually needs to reach $100,000. 10,000 XRP needs a price of $10 per token, roughly an 8.5 times increase from today's $1.15 level. Realistic window, 2028 to 2030, in a bull market environment. 25,000 XLM needs a price of $4 per token, roughly a 21 times increase from today's $0.19. Realistic window, 2029 to 2032, potentially faster with a major CBDC catalyst. 50,000 HBAR needs a price of $2 per token, roughly a 25 times increase from today's $0.079. Realistic window, 2030 to 2031, in the optimistic scenario. On pure math, XRP looks like the favorite it needs, the smallest multiple. And it has the strongest institutional tailwinds right now. The ETF is live, money is flowing in, and regulatory clarity finally exists. XLM is a bet on global payments and sovereign digital currencies. If governments start adopting digital currencies at scale on stellar infrastructure, the token could reprice fast and unexpectedly. That unpredictability is exactly what creates asymmetric opportunities. HBAR is the longest-term story here. Enterprise adoption is a slow process. Corporations don't buy tokens the week after signing a contract. It takes years of integration. But if Hedera captures even a modest slice of the enterprise infrastructure market it's targeting, the upside is real. What history tells us. There's one thing almost everyone forgets when running these projections: crypto market cycles. Bitcoin historically makes new all-time highs roughly every 4 years following its halving. The last halving was in 2024. That puts the peak of the next bull cycle based on historical patterns somewhere around 2025 to 2026. We may already be in it, or entering it right now. During these periods, altcoins with genuine fundamentals don't just go up 10 times. They can go 50 or 100 times in a matter of months. That's not a prediction, that's historical record. In 2021, XRP ran from $0.25 to nearly $2 in under 3 months. HBAR went from pennies to $0.57 in that same cycle. XLM hit over 90 cents. In 2017, XLM made more than 100 times in a matter of months. This means $100,000 from any of these three portfolios isn't necessarily a 2030 story. Under the right conditions, a bull market, a major catalyst, institutional FOMO, it could happen much earlier. The real question is whether you have the discipline to hold through a 30 or 40% correction without panic selling right before the move. Here's the honest answer. There isn't a single analyst who can tell you with certainty who gets there first. But there are things clearly visible right now. XRP has the strongest institutional momentum of 2026. Capital is entering through regulated channels, and that's a steady, compounding flow. The probability of gradual, sustained appreciation is higher than the other two. XLM has the most explosive potential catalyst. One central bank announcement from a major economy and 25,000 tokens get repriced in days. It's a lottery with genuinely real odds. HBAR has the strongest technological fundamentals and the most impressive corporate governance structure in the entire industry. The Row Price ETF was just approved, institutional custody just went live. But the market hasn't priced that in yet, and the question is when it finally does. The truth is that an ideal portfolio includes all three. Diversifying across them isn't a sign of weak conviction, it's acknowledging reality. Crypto markets are unpredictable, and different assets catch fire at different times for different reasons. Who crosses 100,000 first? Watch institutional inflows for XRP. Watch government announcements for XLM. Watch corporate contract deployments on Hedera for HBAR. Because those three signals are what will determine where the finish line gets crossed and who crosses it first. Drop a comment below if you had to pick just one of these three portfolios today. Which would it be? I'm genuinely curious to see where the community lands. This is not financial advice. This is educational analysis. Crypto assets carry substantial risk, and any investment decision should be made only after your own research, with capital you can afford to lose.